Joining us from Beijing is Andrew Polk. He's resident economist at the Conference Board, China's Center for Economics and Business. Andrew Polk, thanks a lot for joining us. First of all, let's just find out. It's a 1/10 of 1% decline. It is an October figure. What are we reading from that?
Harish, thanks for having me. Yeah, the index fell 0.1% on October data, that's right. And this is just sort of confirming the story that we've seen. China slowing, but we see it as a gradual slowdown that will continue over the next 3 to 6 months. It's also important to note that it's a broad-based slowdown. It's not that we see one particular sector of the economy deteriorating rapidly and dragging down overall growth, but rather this is a balanced, manageable slowdown for now.
Right. Well, these are October numbers that we did see. Now, what are the signs looking into November and perhaps into the early part of this month as well?
Sure. Well, November is just confirming the story further. You see deterioration in industrial production, fixed asset investment fell slightly as well, inflation trending down. So it's all just pointed to the story of continued slowdown in growth into the new year, but in our view it all seems to be gradual and manageable at this time.
Well, of course, and there's a lot that the central government can do, at least, to reinvigorate the economy should it start to slow down too much. So when do you expect your first move in terms of the loosening of fiscal or monetary policy?
Right. Well, we've already seen the reserve requirement cut announced late November, enacted early December, and we really see that as partially as loosening, but not really outright loosening. You saw FX outflow in October, so really it just sort of counteracted that, adding some liquidity to the economy. We think that there's reason to expect more reserve requirement cuts over the next months. Inflation is trending down. You have an early Chinese New Year, which means that companies will need cash early in 2012. So as far as outright strong loosening, we don't expect that anytime soon, but we do expect them to continue this policy of what they're calling targeted loosening, reserve requirements, some administrative things, and just adding loans to the economy so that liquidity conditions improve for both banks and for domestic firms out there.
Right, inflation, have they got it licked?
Good question. It obviously dropped significantly in November, down to 4.2%. The important thing is you see food trending down to 8.8% in November. That's a good sign for the economy. Food's 30% of the consumer price index, so that coming down will help. Also, you see producer prices trending down, dropped strongly to 2.7%. So we think that it will continue to trend down over the next couple of months. The important thing is that they don't turn on the taps too much monetarily. Otherwise, they risk inflation coming back quickly.
Most people are looking at perhaps growth rates of about 8% or thereabouts when it comes to 2012. Are you in that camp as well?
Right. Well, we're actually a little bit on the high side. We're at 8.7% right now. We expect some of this loosening to take effect. Economy's still got strong momentum, and we see a rebound sometime in the middle of the year.
Thank you for that, Andrew. Andrew Polk there joining us from Beijing.